Hello guys, good afternoon, good morning, and good evening depending on when you are watching this video. Please, if this is your first time coming across my channel, kindly do me the favor to hit the subscribe button, put on the notification bell so that anytime I put content like this, you'll be among the first to get notified. Now today I just want to show you a simple strategy you can use as a trader, most especially if you're a beginner, and then you can make profits with it. Is that clear? A simple strategy that you can use as a beginner, then make profit with it. Now this software is going to help you analyze liquidity, right? Just the same way you have been observing or watching how other forex traders discuss about liquidity. So this software is going to help you analyze liquidity, then also teach you possible entry opportunity during the analysis. Is that clear? During the analysis, possible entry opportunity will also be shown. Now, when you look at the top of these charts, when you look at the charts top here, you see it said multi-time frame liquidity analysis. On default, we are using 3 different time frames, which are H4, H1, and then M15. H4, H1, and then M15, right? So these are the time frame I'm currently using. That is on default. That is the time frame I'm using. Now, it has another part which states that cleared price type. Now, in liquidity, or when we're talking about liquidity, we have the buy side liquidity and then the sell side liquidity. So, this software helps you to identify which liquidity has been taken out, at what level was the liquidity taken out, then does liquidity lead to a shift in market structure, that is market structure shift, or a change of character in market structure. And also, what is the next liquidity type we are targeting and what levels are there? So first of all, it tells you the level or the liquidity that has been cleared out, which is the type, the price type. Then does this liquidity lead to change of character or market structure shift? If yes, you will also be able to identify it at the level. Then thirdly, which type of liquidity are we targeting next? Are we targeting sell side liquidity next or buy side liquidity? Then what level is it? If it is a sell side, which level is it resting? And if it's a buy side, which level is it resting? That's why we have the target type, and then we have the target price. We have target type and target price. So this IL you are seeing here is internal high or low, while this one is external high or low. Exactly, it's internal high or low or external high or low. That is how it ought to be. Exactly. So I'm going to explain to you how this software or system generates opportunity. Exactly. Now, since we've talked about the liquidity cleared type, which is at this point, then if it leads to change of market structure or change of character, it all depends on when we check the level before we'll be able to tell. Then the next type of liquidity we are targeting, which is on this particular pair, which is gold, we are targeting buy side liquidity. You can see that the 3 time frame is telling you that we are targeting buy side liquidity, and when you have 3 time frame telling you the same target area, it leads to what we call confluence. Now it's telling us that the next liquidity we are targeting next is buy side liquidity, and the only move that will lead to that buy side liquidity is bullish. No, that is why we are seeing bullish confluence active here. Exactly, that is why we are seeing bullish confluence active at this point. When you check, you see it's telling you bullish conference active, because the next liquidity we are targeting, it is a buy side liquidity, and the only move that will take out that liquidity is a buy or a bullish move. Is that clear? So the levels where this liquidity are resting are what we have here next. For level for period 4 or H4 time frame, we have 42, 45.13. That is where we are targeting next currently. While for the H1 we are targeting 40.95.95. While for the 15 minutes, which is our entry, we are targeting 40.92.30. Is that clear? So these are the information it is telling us currently, but since we have been able to identify the type of liquidity we are targeting next and which aligns on the 3 time frame, then we've also seen the price level. Next, how do we generate signals, or how does this system generate signals based on this information? Now, if you watch my previous class, or if you're in my Telegram channel, I'm sorry, my WhatsApp channel, for those of you who paid for the software, who are in my WhatsApp channel, I told you that what you should focus on is, the first information is bullish conference or bearish conference, depending on the target type. So when the 3 time frame are giving you the same information, then it draws your attention more to your chart, because at this moment there's possibility price may reverse instantly, right? Because the 3 time frame are giving you the same direction. So any slight move that occurs that leads to the change in your 15-minute time frame will trigger an entry details, entry levels, entry information. And how does this happen? Now, before I proceed to show you the chart, now let me first explain in details this clear side liquidity. Now, let me zoom out a bit. You know, on the H4, when you check this level here, it's 41, 45.42. Except you will have it on your chart, you can't see it clearly, but I'm going to show you on the chart, telling you that liquidity has been cleared, and this level that was cleared, this is where is it. So let me zoom out the chart and show you from that H4. Now you can see that the H4 has its own color for liquidity clear, which is red. So this is the level where price took out liquidity on H4. Are you seeing it? Does that clear lead to change of character? Yes, indeed. Price closed below that price level, and it didn't just close with one candle, it closed drastically, indicating that it led to what? A change of character, or a shift in market structure. Exactly. It led to what? A shift in market structure. Likewise, the H1, it also led to a shift in market structure. So we have been able to see that we have been able to identify the level, the red line or the red information at the top. This is it for H4. You can see it. And we're able to target where price took out the liquidity. That liquidity was a sell side liquidity, right? Because the move that came to take it out was a sell move. Immediately price take out that liquidity. Now, the top or the swing high becomes the next target if price is coming up, or if price is pushing up the next time, right? That is why we're having this one is unswept. Price has not swept this one, but the move that led to take this out is a sell move, so that is why we're having this one taken out. Exactly, that is why we're having this level taken out. That is on H4. The same thing applies to H1 and N15. So now we proceed to how do we generate signal? How does this information now give us signal? Now the first step is identifying when the 3 time frame are giving you the same information. When I mean same information, meaning that the target type is telling you the same thing, because the target type is so important. That is where it starts from. The target type, when the 3 time frame target type is the same, just like what we have on gold here right now, automatically it draws your attention to the chart. telling that any moment from now, there is possibility of price doing what? Taking a reversal. Now, why are we so much focusing on liquidity, both for entry type and then for both for take cleared and for entry type? The main reason is that every price movement you see on your chart are after liquidity. Liquidity is money. Where the money is lying, that is where price is always focusing at. So if that is the case, then why not we just focus on where price has more probability of facing or going to? So that is why we have that conference as our first information we need to prepare us ahead of time. As it is now, those who are using this software are focusing more on buy opportunity. They are focusing more on what? Buy opportunity. And how do we identify, or what is the signal that triggers this buy information to pop up on the chart? That means giving you the entry level, your TP1, your TP2, and then probably your stop loss. Now, this is how the system works. Let me show you using so as it is now currently, initially, please let me give you a rough sketch. On that gold pair price was giving us what? Higher high initially, right? Meaning that price was moving towards the upside. So in my previous video, I told you that all these areas you are seeing here, all these lows you are seeing here, all these lows are areas of liquidity. These are liquidity resting at this point. Exactly. Liquidity is resting at that point. Now, since the time frame, at some point, we're all bullish. Liquidity was resting at this extreme point in each of the time frame, right? Then all of a sudden, price change direction, right? Price decide to do what? Change direction. And when price change direction, you started selling. Now, in the case where price started coming or dropping, as price was going up, all the 3 time frame, the alert you are going to first notice is going to be telling you that the target type is going to be sell side liquidity type, sell side liquidity, sell side liquidity, or sell side alone. Meaning that as it is buying now, the next target is going to be targeting is these areas where I just cycled. Is that clear? These are the areas where I just cycled, which we are expecting price to be targeting next. Now, how do this information result to it triggering an entry price level, TP1, TP2, then probably a stop loss? That is where we now come back to our lower time frame, which is the 15 minute. Now, we notice that before the H4 takes out its own sell side liquidity, the first time frame that's going to take its own is the 15-minute time frame. So what I want to notice is, since price has been buying and all these higher lows are being respected, the first time you're going to notice is that price will just come on the 15-minute time frame. It's going to first take out this 15 minutes, is going to take out its own sell side liquidity. Now, when 15 minutes take out the sell side liquidity, this is an alert of either taking a sell immediately, which we can refer to as snapper entry or breakout entry. Is that clear? It can be snapper entry or breakout entry. So immediately price closed below the 15 minutes and took out this low. On the clear side, it's going to register it or record it as, it's going to tell you that this level has been taken out. And we are now going to check, does it lead to a change of market structure? Now, remember that if liquidity is taken out in a normal situation or in a normal circumstance, price has not to close below that point, except probably maybe it occurs on the higher time frame, right? But the situation whereby in your lower time frame, price has to close below or above the liquidity zone with a full body. With a full body, not just coming with wicks then close back, but with a full body. That could indicate the possibility that price is going to do what? Change character. This is based on price action. So if 15 minutes close below this point, which was the initial sell side liquidity, immediately price close below this point. This is our entry. Don't forget that all the time frame is giving us sell side liquidity when price was pushing towards the upside, because it created so much liquidity under these lows, under the higher lows. So we expect in future price to come back and take out those liquidity. So immediately price close below this point with a full body, this could signal a change of character, right? It could signal a change of character. But if probably it came down with a full body but ended up closing with a wick, it means it is a pure liquidity liquidity sweep. But in this case, we are not just focusing on liquidity sweep alone, we are focusing on both it creating a change of character or market structure shift. So immediately it's changed. Now, if you check that same dashboard, there's a Fibonacci level that calculates the 50% if price close below this point, right? So immediately price close below this point, the indicator, which is the Fibonacci, marks the top and marks that low, which is now cleared, right? Then it marks out the 50% of that same low. Now the 50% is the blue line you are seeing there. So it will be risky for you to place a sell just due to the fact that price closed due to using a breakout. That is why we said, okay, let's introduce a Fibonacci level that's going to mark the 50% when price is cleared. So that is why you are expected to place your order, either a sell or a buy, when price retraces to the 50% after clearing that liquidity on the 15-minute time frame. So immediately you notice it, you can place your sell limit on the 50%. Why are we doing that? For it to reduce drawdown, which can eventually end up leading to losses. So to avoid drawdown and massive loss, we use the 50% as the entry. So we'll place a sell limit here, or we expect price will trace back on that moment before we give or open a position. So when you open a position, then you place your stop loss above the swing high, right? Few pips above the swing high. Then we target the next time frame. Don't forget that this is the 15 minute that's taking out now. So we target the next time frame level, because we believe that if 15 minutes on is taken out, the next target price is going to be targeting is the H1, because that is our middle time frame, right? So at this point, we have placed our sell limit on that 15 retracement. Sometimes it doesn't retrace, so if it doesn't retrace, don't feel bad. If it retraces, it is usually of more advantage. It has high advantage that you might not encounter drawdown, especially if you are using a very small capital. So when you place your sell limit, or probably you expect price to retrace to that level before you place your sell, then you will target the next time frame, which is the H1 SSL. That means the H1 sell side liquidity is our next target, because that is the level that is going to be your TP1, while your TP2 will be the H4 sell side level. That is in the case of if price is dropping, right? Now immediately price starts taking out this liquidity, immediately price takes out this liquidity, it's now going to register the swing high as the next target for that buy. But don't forget that we are using the confluence to follow the trade. Since the 3-time frame gave us a confluence telling us that price is targeting a sell side liquidity, so we are going to utilize the 3-time frame sell side liquidity before we now consider looking for opportunity to trade the buy side confluence liquidity. Exactly, meaning that as it is now, if peradventure here is the H1 level SSL and here is the H4 SSL, the fact that price has cleared the 15-minute time frame SSL and we have gained entry because that is our entry. So our TP1 will be here. TP1 will be here, which is the H1, and then our TP2 will be here, which is the H4 level. So if we place our cell at this point and then want to use TP1, our TP1 will be around here. Then if we want to proceed to even trace the H4, then our TP2 will be resting at this point. Exactly, our TP2 will be resting at this point. Then this top now becomes the 15 minutes next target area. So until we utilize the H1 and the H4 area, we are not going to focus more on taking buy at this point because it is very risky. Why did I say it's risky? One, it is risky in the sense that since we know that price usually go for liquidity, you trading buy just because you saw the next target as buy side liquidity on the M15, which is different from the H4 and H1, then it means that we are doing the wrong thing at that particular moment. Exactly. So until we target this one and target hit, probably come to this one and target hit, then before we consider, okay, there could be another possible reversal to take what? Buy. It might not be instantly the following day, but it's going to be registered in their mind that next target is this particular zone after the whole area or the whole conference we saw initially. Is that clear? So that is that for the entry model for that. But when you come to this gold, for instance, this gold we have here, on this gold now, we just took out the TP, the H4, the sell side for the previous sell side for H4, H1 is taken out. Now the buy side. Now until the 15 minutes buy side, that means, let me zoom out and let me show you. We are going to only consider buy if price close above this 15 minutes. This is the 15-minute buy side level. So until price close above it, that means price comes close above it. Immediately price close above it. If this level you are seeing here still remain as the 50% level, then it means that we are going to wait for price to come back into that zone, immediately stepping into the 50% level of the Fibonacci on the M15. Then we are going to place buy. Then use the swing low, or which is the external low, as our what? As our stop loss. Then we target the next entry for both the 50. We are going to target the 50% level of the Fibonacci. Daily price retrace back to it, then we are placing our buy, and then we target the H1 or the H4 next area of interest, which is the what? The TP1 and the TP2. So it's because at the moment price has not taken out the 15 minutes. That is why we see it's still showing confluence, bullish confluence. Really price takes it out, it's going to give us our entry level, our stop loss, TP1 for both TP1 for both the price level for TP1 and TP2, then our stop loss. So as it is now, it is not, price has not, it's not getting a buy opportunity at the moment. So now another factor that is going to let us know or believe that maybe this entry may not come up immediately is what you are seeing here. It is called the pullback approach, right? This is called the pullback approach. Now this pullback is telling us that price has to come up to this level. Can you see it? It's telling us that this is where price is coming, and that particular level is the bullish order block for H1. That is bullish order block for H1. That is why you see me taking sell and then targeting those area as what? As my exit. So since we've not gotten liquidity entry, then it means this pullback is right. That means price is definitely going to come up to this point before we are going to consider taking a buy from that point. Exactly. That is what it just implies. So in my last video, I didn't introduce the pullback. The reason why I didn't introduce the pullback is because we are not using the pullback for entry. Is that clear? It is just of recent I will introduce the pullback into the system. Since we are having the same price level right now, it will be unfair to be waiting for price to trigger the buy before you start buying. So while you are waiting, there might still be opportunity for you to trade sell, because at the moment you are waiting for buy. And how will this buy going to take effect? Let me show you again how that buy is going to come to take effect on the chart. The buy will only take effect if, don't forget that this is what happened. Initially price was buying to the upside, right? This is what price did at first, right? Now before it started dropping back, immediately price started covering all those liquidity, which was the SSL, which was the SSL, or the SSL resting here. That means the sell side liquidity resting here. If the price start covering them, then another liquidity will be generated. Immediately price cleared this one on 15 minutes, a buy side liquidity has been generated here as the next target for each time frame. So as price keep moving back, then clearing another one is going to rest here again. These are all buy side liquidity, right? These are all buy side. So let's assume this is the 15 minutes time frame. The only time price is going to activate and give you buy signal for that gold, I'm using the gold as an example, it occurs on all time frame. It is only when price come, clear this buy side, immediately price clears this buy side liquidity, it's going to print out or give you the entry details for, it's going to give you the entry details, give you the TP1 and TP2. And I usually tell you that the TP1 is the H1 buy side liquidity, which is the next target. But this is, if you place your buy immediately, this is a breaker entry, which is very risky. This breaker entry is very risky in the sense that price may pull back. So immediately price clear this point, it's going to tell you here it has been cleared. Once price close above or take out the buy side liquidity in 15 minutes, then it's going to mark here as the next target, which is the sell side. Then the 50% is going to be resting at this point. So before you place your buy, I said you should always wait for a retracement into this 50% to reduce or stop, to avoid drawdown, massive drawdown. So this is your entry point now. But if you know that you have enough equity that is going to see you through, you can, immediately it breaks out, you can definitely take your entry. But it is usually safe to see a retracement at least 50% into that breakout, so that you will not have much to lose if eventually price is not ready to buy. Because the instances is going to come, take out the 15 minutes liquidity, not just taking it out, close, changing the structure entirely. So until price starts buying, telling that price has changed direction or changed character from bearish to what? Bullish. So for you to be at the safer side, use the 50% approach. So let's assume here becomes our H1 and then here becomes our H4. So this, the first TP is going to be resting on your H1 and the TP2 is going to be resting in your H4. So immediately price, you trace back to your 50%, which is this level. Then this is where you take your entry for buy, and then you target the H1 high side liquidity sweep for exit. Or if you want to extend it, you can use the H4. Exactly. So but if you check that gold now, price has not taken out the buy side liquidity on the 15 minutes. That is why we are still having active bullish. That means that conference active bullish or bullish conference active, telling you that buy side, which is the next target. So since it has not taken it out, you might be waiting, and while you are waiting, price will keep dropping. So to avoid that, that is why I introduced the pullback approach. Now the pullback is now going to tell you where exactly price is targeting or where price is going. So this is going to make the information more clearer to you. As it is now, it's telling us that on this gold though, right, that gold has a target of dropping down to this level. So we now see reason why there's possibility that buy may not come up anytime from now. So that is why I took sell, and I'm targeting this area as my exit, because the pullback has told me that this is where price is coming. Are you seeing it? And this was the entry point. Let me zoom out a bit. This was the entry point. Now using this pullback, it also requires you to focus and watch clearly so that you'll be able to join at the right time. Yes, if you don't join at the right time, you might also end up encountering drawdown again. Is that clear? You might also end up encountering drawdown. For instance, there was a trade I took on Boom 1000. Let me show you. It has even closed on profit already. You can see the target. Okay, it has closed on profit. Then there's another one I took on Crash 500 using the same approach. Okay, you can see this was the entry point. You see, this was the entry point, but I entered when price come to this point at first. This was my first entry. It was when it dropped down back that I took my entry from there again. So you can see now it's telling me the price is expected to do what? Buy all the way up. That I'm expecting price to do what? Buy all the way up. You can see where I put my TP, that is the 50% level, right? 50% level. And when you check here, there's no active information or active trade based on the information. So the pullback may help you to continue or to identify where price is going. That is the function of the pullback information. And as I said earlier on, it is very important you know when it starts so that you don't end up joining halfway. Aside that, there was one I also traded on what is it called? Crash 900. You can see now Crash 900 is saying all this area is telling us sell. It's giving what? Sell side liquidity. That means the liquidity price is targeting next is sell side liquidity, and the only move that will come and take it out is a sell. Or do you notice that price is buying? So pullback now is telling me that that sell side is not yet active. Getting now, it's telling me that sell side is not what yet active. So I took the entry, I bought, and then the price is still on the buy. So the pullback is going to help you a lot, most especially if you join the right time. It's going to save you a lot. So you will not miss at any point in time. Now there is one I took on Crash 1000 which I took late. I'm going to show you. Now you can see it. I entered this trade very late. You see, this was the entry point. This was the entry point. There is no active trade currently now. This was the entry point, and you see where I entered. So price is doing what? Is retracing, but it's telling me that price is still going to what? Drop. That is the information. That price is still going to do what? Drop. And you can see where we're expecting price to drop to. This is where it's telling me that price will likely drop to. Right? I don't know if you can see it, but this is where it's telling me that price may likely drop to. So in situations like this, since the distance, you just check the distance from this entry and your entry point. If it's too deep, you might wait for price to retrace, or probably you just ignore the trade till it continues the normal liquidity entry type before you buy or you sell. So this is the benefit of this system. It helps you to identify what price is doing at the moment, when to join, and when to keep off. Is that clear? So that is what I'm using currently on gold. As others are waiting for price to buy, to take out the 15 minutes before they buy, I'm going with the pullback, because the pullback is telling me that this is where it's expected price to come. Today is Monday 17th. That's when I'm recording, November. So this is where I'm expecting price to drop. So you can see that it's more or less like ranging. The market has not really shown direction, but with the help of the pullback detector and direction, I was able to track that entry. You can see where I took my entry from. And this is where price is coming. So the function of this software is it tells you, it analyzes the liquidity, tells you the one that is cleared, just like I told you. This was the H4 that is being cleared. Immediately this point was cleared and led to a break of structure here, right? Immediately it updates this this one right here, that which is the next. You can even see it's telling you that next target period H4 buy side liquidity, right? That is the next target. Then both the H1 also has been broken and is targeting also the next side. So until price comes and then take out those areas by closing, make sure it closes just like what we have on the H4. It didn't come with wicks, it comes with full body, indicating that this market has really changed character from a bullish market to a bearish market. Exactly. So when you understand this concept detailed like this, it's very easy. For those of you who are saying you don't understand initially, these are the little errors which I just pointed out now. So these are the little errors you're probably missing. Then if you are new and you still want to get more information on how this thing work, you can check the description below. You see my WhatsApp number there, you can chat me up. Exactly, chat me up. Then I can give you details on how to go about it. We are using liquidity approach. This is not using your lagging indicators. No. Liquidity helps you to identify the direction price is moving currently, what is the next target, and then at what point you should be expecting to take entry. That is just the function of this software. It helps you to identify which liquidity has been taken out, which one is being targeted next. Is it appropriate time for you to take entry? If yes, it's going to give you those details. And if no, what is the price doing next? The probability and the pullback detector is going to help you to identify where price is targeting next. If it is fully ripe for price to start buying, you will know. I also have a trade on volatility 75 index. Can you see? Immediately it gives me this entry. See now, it's telling me that I should buy. When you check the settings, target type, you see sell side, buy side. So this is where most of you are usually confused. You don't know what to do next, right? But with this help of this system now, you'll be able to know where price is going next. Now it has already given me info that is going to pull back, and it has told me that this is where price is coming, this is the level price is targeting. Then if I don't want to take all, this is where the 50% is resting, meaning I can buy up to this level, then opt out, or I can start using, once price get to this point, I will start using what is it called, break even, to hold the trade up to this point. Exactly. But the main thing is try to track it from the start, and the only way you can do that is to apply little pairs. That means just pick 2 or 3 pairs, focus on them. How do you focus on them? When you install this software on a VPS or on your PC, that means if you don't have a laptop, you can install it on VPS. When you install it on the VPS, it sends you notification, right? It sends you notification telling you, okay, this is where price is currently. This is what you should do next, right? This is what you should do next, and this is the next target where price is going. Exactly. It tells you this is the next target where price is going. So from there you start following up. That means you either start waiting for the buy, or you activate immediately when the setup is ripe, or if it is a sell, you also activate. That means you place your entry when the setup is right. That is all. Then if you have laptop, you can also install it. But even though you have laptop, you still need a VPS, because with this VPS, when your PC is off, you can also trade the direction of where price is going. But don't forget that I told you that the main important thing here is make sure you start when the trade, like this volatility 75 now. You can see that the pullback starts and where I took my entry is not far. So in cases like this, it helps me. But if price has moved up to this point, then I took my entry. There's possibility price may retrace back a bit again because price doesn't move straight. There's possibility price may retrace back a bit again before you start buying, and that is what exactly I encountered on Crash 1000. So when you have little pairs on your chart, you'll be able to follow up and then you'll be able to get the right time for entry. Exactly. So that is all. Thanks for watching. See you in the next one.